Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, the 19th of January, 2023. Wow, how fast time goes. It's about 5:25 p.m. Central Time. Hope you watched the game of the Bulls playing in Paris against the Pistons and a win. I like that. What about this gold market? Boy, a big move to the upside. It's starting to hone in, though, so I'd be a little bit careful against the upper Bollinger Band. But all of the metals are acting actually pretty good as the dollar's been down a bit. People were looking at the stock market, probably scratching their head how much of a breaker they're going to get. At one point today, some of the indexes actually went lower for the year, so that's interesting. We're seeing that the energies are climbing with the exception of nat gas, which just stays under pressure. Although I'm telling you, in the Midwest, we're getting back to normal temperatures. So starting tomorrow in Chicago for the foreseeable future, we're normal. We're not above normal, so that means we're going to be around 30, 32 degrees for a while here. And that's cold. Any stretch, we've been spoiled because every day it's in the 40s, almost near 50, which is unusual. It's time for you to probably move your trading over into the April Brent. I've done that right now, looking at that. Bitcoin, you can see a little bit lower. So let's take a look, if we could, at what the charts look like. And as I said, the market seems to be gearing to come into this resistance area. You're now at 1935.10. So how far are you away? $50 from those highs? Not that far at this point in time. It's been a labored but a consistent move to the upside. And if you look at where the slow stochastics have been doing, just take a look at this pattern. This is what I teach in my charting course, how to put these studies on, and then you could see if you have stops under each successive low from the swing line. I'm not drawing these by hand. I wrote the formula to do those, and bang, away you go to the upside. So until you take out now 1898.60, the trend is up. Take a look at what the moving averages are doing. You're staying over that average as well. The resistance right here. Remember I said that upper Bollinger Band? So yeah, maybe you can reach up for that 1948.70. It would be nice, but you got pretty close today to the number. If I back you off, and I'll do that right over here. Let me come back one day. As the market was approaching the highs today, I was telling some of my clients, I think the smartest thing to do is take partial money off the table. And yes, I had them with a buy signal the other day. I got lucky in that market. Not every trade works, believe me. But that was a good time to cash in on a $30 winner in gold, and that's a nice size winner by any stretch of the imagination. And now they can use stops that, hey, if you lose the embedded reading, away you go. And if you don't, you wait and you have buying power on the break. That's exactly what I like to see. In the gold-silver ratio, you know I've been saying gold is stronger than silver, and it stays that way until it gets back underneath this red 18-day average of closes of the difference between the two. And I'm very content right there that that's what that ratio is doing. And that's a ratio chart. It's how many ounces of silver you need to get an ounce of gold. So it's not subtracting one price from the other. Remember that. In silver, what did I begin telling you as I got back from my vacation? I said, whenever you narrow Bollinger Bands that much, and I didn't change the scale for a long time here, it got wider and narrower. I can change that, but it's narrow. You make false moves to the upside, false moves to the downside, and it whips you in between. This is so typical. But in the end, it sets a new trend in place. So it's building power in here to move out. Now, if it goes with the rest of the metals, I think it will. I think it's to the upside, not the downside, but we have to wait and see if it happens. It's nice to think these things, but you act on the chart action, not your thoughts. In the copper, a continued move to the upside. I'm pleased with that. You're now finding a home over $4 for quite a while. And you know, I started talking late the last quarter of last year, and I kept saying, I think you're going to get a 5 in front of this market. I haven't changed my opinion at all. In the platinum market, the trend is down. Will it have enough power to get to the lower Bollinger Band? You're already getting to the area where you're oversold. Any reading the way I teach charting, under 30 is oversold. Most traders are looking at the traditional and the slow stochastics of 80-20. I don't. I found there's a better way to do it the way that I like to teach charting. In the platinum market, you tell me what you did yesterday. You had to cover, in my opinion, the first challenge of a Bollinger Band when you're not embedded. And like silver, this is now a whipsaw market, so be very careful. You may go absolutely nowhere in that market for a while as it builds power for whatever the next trade is. And in the dollar index, I'm still very much in the bear camp. And I stay there until you lose the embedded reading. Lose it, and no, then I don't want to be short anymore. But you got to get that red line to close over 21. I don't know that it's capable of doing it just yet. I just think the dollar is going to stay under pressure. Which brings me to next week for you. I'm going to hold my very first webinar of 2023, and I'd like you to come. So it's going to be next Thursday. It's going to be at 12:30 p.m. Invites, if you're on my mailing list, have already been sent to everybody. It's first come, first serve. There is limited seating, and we will have questions galore. You can ask it on spiders, ETFs, stocks, futures markets. You can ask me technical questions. You can ask me what I think where the markets are going. We can cover markets on daily charts, and we can cover them on weekly charts. Your call. Now, there is something that I require. If you're going to ask me questions on SPDR, ETFs, and stocks, when you get your receipt for your invite with your passcode to get into the webinar, and it's all free to you, it requires and asks you, do not write me during the webinar to do SPDRs, ETFs, and the like. There's thousands of them, folks. Give me a chance to set the charts up ahead of time. Futures, I can knock off like that. There's only 30, 40 futures markets, so that's simple for me. But how am I going to possibly have the charts ready to go? I've got all the futures. I'm not going to have all the stocks ready to go. So it helps if I do that because I think you're going to want to see window envelopes with it. You're going to see all the studies that I put on, not just the limited ones you see here. Take advantage of that. Again, how do you get there? You can call my staff, or you can take your cursor, just move it to the top up here, give a click on the icon, fill out the form, and you'll have your reserved seat. I'm Ira Epstein. You have a great day, and I will see you all in my next videos or first thing in the morning. Take care.